Guys, January 5th, critical information ahead of the trading day today. I'm recording this a few hours before the market is going to announce the job data at 8:30 Eastern Time. We have a very rare development as far as 13 market moves. The sequence of the moves is 11-9-11, and just the fact that it spells into a sequence 9-11 should be alarming by itself, and that should be, even if you don't know the 13 market moves formula, tell you that hey, something dangerous is about to happen here in the market. For a quick review of the moves, guys. A move 11, it has three variations, but basically it is a topping move that the market is in a transition right now. And often when the market is in a transition, there are disbelievers, such as there are a lot of disbelievers right now among institutional investors that have such bright outlook for this year. I mean, if you heard some of the analysts in the public media, I mean, the general consensus is the economy is wonderful. Nothing can go wrong. They do acknowledge, hey, there is a possibility of a World War III, but hey, it's going to be fine. Everything's well. When everybody thinks that everything is fine, the probability of something totally opposite is just, it goes through the roof, especially when you combine what the VIX has been doing over the course of last few days. It's getting to that level of 14.8, which I call the danger zone, because that's where most of the market crashes begin. So as far as the topping move formation, it looks like a pyramid. So let me grab a pencil here and let's draw this move. It basically looks like this. It's a pyramid formation. Something shoots higher and it kind of looks like this. So the overall move 11, it's just basically, it's a pyramid like this. And so if you carefully study all of these 3 days moves, okay, so this was a Tuesday, this was a Wednesday, Thursday, okay. Now, the last trading day last year, remember I told you we had a move 2, which was already an indication that we're going to have a series of red moves. Now, if you have the 13 market moves, I strongly encourage you guys to go back and revisit all of these things, because they're going to come very, very handy over the course of the next 7 days as far as knowing when to get in, when to get out, how to get your best entries and exits, because each move has a certain time frame that is recommended to get in, get out, switch from puts to calls, calls to puts, and so on. Because clearly there's going to be bounces, okay? There's not a crash in United States history that did not have a fucking bounce, okay? Nothing goes just straight down. But for the purpose of the sequence, we're 2-11, 9-11. 9-11 sounds an alarm. And it's not that it's 9-11. If you really break down the case right here, this move 9 indicates a shift. Okay, for example, in anything, you get a move 9 or 10 when there's some kind of market catalyst that is associated with Federal Reserve, because those are events that market takes highly seriously and can react in a meaningful way. So for that reason, within the 13 market moves, we have 2 specific moves designated for the catalyst, for the days on which you have a catalyst associated with the Federal Reserve. And what we really track, because you could be looking at this, you could be saying, well, Leo, they all look like a move 11. They all like resemble a pyramid, which is accurate observation. The reason why, okay, we created a special type of move, okay, because the reaction and the way the reaction unfolds after 2 p.m. So this dot right here would be corresponding to the 2 p.m. Wednesday Federal Reserve minutes. In this case, it wasn't a Federal Reserve announcement, it was a minutes, it was a text that was reviewed. So basically, you want to track the initial reaction, and in most instances, you know, the way we trade here at 13 market moves, we bet against the initial reaction. So the initial reaction is to the upside. Okay, so initially market goes higher after the Federal Reserve minutes and then it sells off. So this is your move 9, but it did happen within an overall formation of the day of a pyramid. A pyramid signifies a top. So we have top, top, top. We have 3 tops. Yesterday we have another top. So basically every day, even though it looks like the market does not drop a whole lot, it bounces. It drops 20 points, it bounces 20 points. Overall, it looks like nothing is really crashing, nobody's panicking, nothing is going on, okay? But for that reason, I have this historic chart here for your review, which I've shared with you guys in some prior videos, okay? Watch this. In some of the videos I posted roughly 5-6 days ago, I pointed out this is when you know to be ready. When do you know to be ready? I said pay attention to the initial gap. All right, and this is a very good example of how most of the significant market drops begin. So initially you'll have some kind of gap, but look what happens after the gap. Like there's 3 days of basically indifference. It's because the market participants, they're like, okay, is this shit really happening? Oh my God, what are we gonna do? And some participants within those 3 days that are sharp, they accumulate heavy short positions, right? And then the shit collapses. But no, without balances, right? So, and it's within those 3 days, right? It looks like you're dropping, which is what these candles represent. It looks like you're dropping, but then you're going slightly higher. You're dropping, but you're bouncing, but then you're dropping. And so overall, you're not going anywhere. This compares pretty well to the current condition where, okay, here's your initial gap down, okay? Pay attention, pay attention. Here's your gap down we've been waiting for, okay? And you have 3 days. And 3 days, right? It's just like, well, Leo, you might have bought some puts, but you're not getting a ton of traction. Why? Well, because of the magnitude of the move. As you can see, I mean, these red candles here, overall the move is lower. It's clear to everyone, right? But no huge money has been made yet because this is almost, to me, okay, is a replica of this situation here. Okay, all of these candles, we're not really moving anywhere, even though this looks like, okay, yeah, we're heading lower here. But today could be the day of the last bounce, and this could be your ultimate, most beautiful entry before what happens, before we get this. Okay, by the end of the day, we could be seeing this, or we could be seeing this Monday, okay, Tuesday, and look, 3 days. You should be targeting at least a minimum of 3 days lower. This is your most critical information ahead of, the market open today. And as you know, if you analyze this moves, 11-9-11, understand that when the bounce comes, okay, this is when you want to short. Okay, and yesterday, when the market had a characteristic of what could have been like a move 8, because we finally saw just a little bit of volume to the upside, and they started buying some tech stocks, and they started carrying tech stocks higher, and they stalled, okay? So as far as the move's concerned, you got solid confirmation of a top each day. Basically, there's some people still believe you should be buying the dip right here, okay? There's some analysts that are publicly speaking and saying, hey, this is the time to buy Apple yesterday, right? Oh, shit, this is the time to buy it. And then guess what? Apple's probably going to drop below 180 today. Probably is going to end up at 177, 178. And come Monday, Apple could be at 175. So what's going to be to this analyst that bought it yesterday at 182 or 183? Guys, this is a representation, some of these bounces are of institutional investors who think that this dip, like this big dip, right? I mean, what fucking dip? Okay, this doesn't even look like a dip, but they think this is a dip. The market goes from 4,100 to 4,800. We dipped 60 points in 3 days. and somebody actually out there thinks this qualifies as a dip, we're nowhere. We haven't even begun the real dip, okay? And if we're to break down this chart, so now we know the sequence is highly bearish, and it spells out of the sequence here, it spells out another red day, which, okay, not all red days in the 13 market moves formula, not all red days are going to begin in the red zone. So hopefully, okay, for the purpose of you putting the greatest trade today, the market's going to do what? First, it's going to bounce, and then by 10:52, it's going to sell off. So basically, last Friday was a move 2. There is a possibility that today we could get a move 3. Unfortunately, I don't think this is going to be the highest probability outcome after the job number, because if you were paying close attention to what was happening yesterday, on Thursday we had 2 data points, and as far as jobless claims, hey, they went down. As far as the ADP data, the private payrolls, things look good. So this is an indication of us getting a strong job number today. Well, strong job number today means that everyone was wrong. Everyone was wrong right here, okay, when they were buying the market consistently from November until the end of December. Well, why does that make everyone wrong? Well, because they basically estimate that Federal Reserve is going to cut interest rates. Well, if we get a strong job number today, the probability of Fed cutting interest rates, it doesn't go up, that probability goes down. And the market participants, which are already unsure based on these pyramid formations on daily basis, and the lack of bounce signifies that, yeah, even though there's some market participants that believe buying the dip here is a good idea, there is a greater number of participants that believe otherwise. This is why the market is unable to bounce. Now, at some point, when the market drops substantially more, this consensus is going to change. And this is when you're going to finally see a real bounce. But we're nowhere at that point yet, because we are at the drop-off. We are at this point. So today could be your greatest entry as far as participating in the expansion of the move. And what should you be looking for, guys? You should be looking for number 60. So write this down somewhere. We're looking for 60. 60 is your lucky fucking number of the day, which means if you paid close attention to the last 9-10 videos, there was a video there that explains for 12 months, the market has been trading in the range, in such a range that it would not drop by more than 60 points. There were occasions where the market would drop by more than 60 points intraday, but by the end of the close, the market would surely bounce back up and maybe finish minus 40 points, minus 52 points, something like that. We're not had a day where the market dropped by more than 60 points and closed officially by more than 60 points in a day. There's a high probability of that outcome today. So the moment you realize that the market will close lower today by more than 60 fucking points, okay, what do? Okay, this is your moment. This would be an equivalent of this moment, right? And what comes next? You get even a grander move lower. So to put this piece of the puzzle together, okay, so let's say this is going to be today, Friday, which again does not mean, just because it's a red candle, does not mean that first some market participants are not going to cheer for the good job report number, okay? First, that means that, you know, hold on. I'm trying to draw this for you, so let me go back here. So it doesn't mean that first the market cannot move higher. If the market initially moves higher after 9:30, well, you're going to have a huge reaction, right? Here at 30 Market Moves, we're going to be trading the market at 8:30 Eastern, bottom line, okay? We're going to be trading the job report. For those of you that only have your account set up to trade options, you guys are not even going to be able to catch that move. And it's probably going to be a really good size move to be catching. Like on a 10K account at 8:30, you can probably go into 40K if you catch the right move. So that's what we're going to be doing this morning with some of our traders. But guys, focus on this. If you only trade in options and at 9:30 you come in today and the market is cheering because some market participants are still hopeful of a bounce, they're still hopeful this is a good place to buy the dip, okay? And so if we're going higher, there's a high probability of a move to. Review the video I've posted about the move to, which was the last move to we had was on December 29th, okay? And basically initially the market goes higher and then it reverses entirely. So just because it's a red move, it does not mean that at some point in the day you're not going to see the market in the green. Well, this is probably the most difficult part for most of the traders. Well, the job report is good. The market's going higher. Oh, I cannot be shorting this. Leo, they're buying the dip. I'm going to buy the dip. And that's exactly the moment you get fucked. Now, this is the base case outcome for today. This is what you want as a short seller. You want all these goofballs to think that, hey, this is time to buy the dip. Okay, we already know any bounce is going to resolve into a reversion to the downside. So your goal as far as your entry today is to catch that. You want to catch that, guys. You want to catch that bounce and you want to short it. And clearly, if we're expecting this, if this is the beginning, and then Monday is going to be this, and Tuesday is going to be this. Okay, so we're planning for at least a 3-day with a move expansion of over 60 points. So over the course of next 3 days, I mean, we could be down 200 points. Okay, but the market is not certainly pricing that yet. Nobody's talking about that yet. But based off everything that we're looking at the charts, let me just review some of the key points here. If you look at the blue line and orange line, by the way, I have these lines set up as 8 and 13 instead of the regular 50 and 200. So if you want to pull that up to get the same type of crosses, set your moving averages to 8 days and 13 days. But we have a major bear cross on 8 and 13, which tells us the next move is lower. We have a confirmation of that cross right here on the MACD. And the beautiful part is on accumulation distribution. Yes, people began selling a little bit, but guess what? So many more people can come and fucking sell here. And which is the part that this is the part that makes the move expansion possible. And even though the market has not dropped a lot in the last few days, what has happened is the volume component has steadily been increasing and staying strong. Sorry. So basically, the volume component is going up while we have not had a move expansion yet. All the crosses that we pay attention to that are critical to your day-to-day trading, they just beginning to cross. MACD just crossed. If you look across multiple sectors, multiple stocks, you will find the same identical crosses. And with these same identical crosses, they happen in multiple sectors. You're not getting a sector rotation anymore, with the exception of one sector that, if I have time, I'll record another video. There's one sector that normally does well. There's actually one sector that institutional investors will buy regardless because that is a defensive type sector. So I'll describe it in the next video, but basically expect this candle today, okay? It's going to be a big red candle, which is going to be followed by another red candle Monday. The only thing that can change the outcome of any of this is if by a miracle they approve the ETF on Bitcoin, right? If Bitcoin ETF gets approved, we'll get a strong bounce, at least initially. And so this is the only thing that can save the market, I would say at this point, is Bitcoin ETF. Okay, if we get a miracle approval today, which It would be odd that they would try to approve Bitcoin ETF on the same day with a job report. Okay, it would make sense that if Bitcoin ETF approval was to come in, they would wait for the market to do this first, and then they would actually, okay, this would be a good time to announce the Bitcoin ETF approval, right? So the market could have a reason to bounce. All right, okay guys, so keep in mind, even though this is your ideal scenario for the day as far as the short seller, okay, there is a chance that the market was holding up its reaction yesterday to what appeared to be pretty good job number data. And today, we're going to get a strong job report. The market may just get the fuck down. So you may be coming at 9:30 to a market that's already down maybe 40 points in the morning. And then in this case, it's going to be a move 3. Well, it doesn't matter how we start today. Initial bounce and then sell off, or sell off, then bounce, and then sell off. We end up the day much lower. So last point, okay, I think I started talking about it, but I didn't finish the idea. After Fed minutes, we had a move 9. Well, we hadn't had a move 9 in a year, okay? And this could be indicative of a major shift that precedes such statistical phenomena as on Mondays, the market just doesn't fucking drop anymore, right? We have not had a day on a Monday where the market hasn't dropped, okay? Or initially it might drop and then it bounces. Like historically, Monday could be your big down days, but we have not had one of those in like forever. But we also haven't had a move 9 in forever. So the break in the pattern on Wednesdays after the Fed announcement, where we had basically every one of them in 2023 was a move 10. The fact that we're actually getting a move 9 here, okay, tells us that also could be a break in the pattern for Mondays. So when you're considering, okay, what expiration options do I buy, you definitely want to include Monday. So I know we put some biggest trades on same day expiration, guys, but you probably want to split your expirations between today and Monday because those could be your 2 big days. So if everything lines up perfectly here, you could catch this and this, right? And then you could be targeting the bounce or something like that. So guys, this is basically the overall strategy for trading today. If you want to have a high level of success, trade with the 13 Market Moves coach, you can go to 13mmtv.com or 13marketmoves.com. You can sign up to trade with the coach. You can acquire your 13 Market Moves course. For every move, we got like an hour devoted to specifics of every move, how you track it. But it's not that difficult to do once you understand what exactly you're looking for. So, and once you get a sequence and you understand it, it gives you a much higher probability of beating the market, guys. That's all there is to it. I'd certainly love to see more of you beat the market, guys, with 13 Market Moves. So let's roll. Don't miss the next 2 videos. They're also very important.